retain the cash reserve ratio of deposit money banks at 45%. 4. Adjust the cash reserve ratio of merchant banks from 10% to 14%. And 5. Retain the liquidity
and
ratio.
We are now live at the
30%.
headquarters of the Central Bank of Nigeria, where the Apex Bank is holding its second monetary policy meeting under Governor Yemi Cardoso. Let's listen in.
At this meeting, focused on the current inflationary pressures and the need to anchor inflation expectations, as well as ensure sustained exchange rate stability. These considerations underscore the importance of the CBN's commitment to the price stability mandate and the need to urgently bring inflation under control to ensure that purchasing power of ordinary Nigerians is restored in the short to medium term. Members noted the continued rise in headline inflation, driven largely by food prices because of supply shortages and high costs of logistics and distribution. The committee, therefore, was of the view that addressing food insecurity is key to containing current inflationary pressures. On this note, members commended the ongoing efforts of the federal government towards addressing food insecurity. Some of these measures include the provision of various palliatives, release of grains from the strategic reserves, distribution of seeds and fertilizers, as well as farm implements for dry season farming. The committee, therefore, called for the full implementation of the federal government's agricultural policies and programs to apply and further advised for broader fiscal consolidation, particularly on the improvements of tax collection and tax to GDP ratio. The committee noted with satisfaction the level of stability achieved in the foreign exchange market in the last few weeks. This, in the view of members, reflects the impact of the bank's recent policy actions and reforms, as well as increased transparency in the market. In addition, the committee noted the efforts of the bank in offsetting verified foreign currency obligations, an action that will greatly enhance investor confidence and attract foreign investments to Nigeria. The MPC also reviewed developments in the banking system and noted that the industry remains safe, sound, and stable. The committee thus called on the bank to sustain its surveillance and ensure compliance of banks with existing regulatory and macroprudential guidelines. The NPC also enjoined the bank to expedite action on the recapitalization of banks to strengthen the system against potential risks in an increasingly globalized world. Consequently, at this meeting, the NPC was faced with the option of either progressing with its tightening cycle or hold to observe the impact of the previous rate hike and adjustment of the cash reserve requirement. After reviewing the balance of risks and the near-term inflation outlook, members were convinced of the need to progress with the tightening cycle. Key developments in the domestic and global economies. Domestic headline inflation rose further to 31.70% in February 2024 from 29.9% in January. Food inflation accelerated to 37.9% from 35.41%, while core inflation rose to 25.13% from 23.59%. Key drivers of inflationary pressure remain the strong exchange rate pass-through to domestic prices, rising cost of transportation, high cost of energy, and other production inputs, lingering insecurity, especially in food-producing areas, and legacy infrastructure deficits. Data from the National Bureau of Statistics showed that real GDP grew by 3.46% in the fourth quarter of 2023, compared with 2.54% in the previous quarter. Staff forecasts for 2024 indicate that the Nigerian economy will grow by 3.38%. Disruptions to the global supply chain associated with pockets of geopolitical tensions continue to pose a key concern to monetary policy. Global inflation has, however, continued to decelerate in 2024, but is expected to remain above the long-run objectives of major central banks. Interest rates of advanced economy central banks are thus expected to remain high in the short to medium term before commencing a descent. Consequently, global financial conditions may remain tight through 2024. Accordingly, the committee will continue to monitor developments in the global and domestic economies to ensure that inflationary expectations are anchored to restore and sustain macroeconomic stability. All 12 members attended the meeting. The next meeting will be held on the 20th and 21st of May 2024. Thank you for listening.
Thank you so much, sir. That was communique number 151, presented by the MPC Chairman and Governor of the Central Bank of Nigeria, Mr. Olayemi Kadusu. We now take questions from the media. Please state your name, and then ask your question.
Thank you very much. My name is Sunday Michael Ogu. I write for the Trust newspaper. Mr. Governor, I've got two questions. The first one is that the MPC decision is consistent with some of the public statements you have made about how you will continue to raise interest, tighten interest rates as a way of targeting inflation. My worry, however, is this the only option in town?
And we are still live in Abuja. We just listened to Yemi Cardozo, the CBN governor, where the monetary policy meeting is being held. Of course, right now they're doing a question and answer. They raised the MPC to 24.5%. CBN governor also spoke on the work of the committee, noting the urgent need to bring inflation down and under control in order to ensure the purchasing power of Nigerians, making sure that purchasing power is restored in the short and medium term. Understanding that headline inflation is driven by food prices due to logistics and shoddy distribution within Nigeria, He noted that addressing food insecurity is key to containing the current inflationary pressures. He
Thank
did
you very
commend
much,
the federal
Beatrice.
government's measures in addressing some
well,
of these issues,
two very
distribution of
important
seeds,
questions.
etc.
One
He's speaking
on the
now
issue
again.
of
Let's listen to
tightening,
what
and
he
the other,
says
the issue
in
of
response
backlogs
to the questions that are being
for
thrown to him.
transactions. Now, let me say that, yes, from our perspective, the key thing for us as a central bank is to be fully focused on our core mandate. And that core mandate basically is to fight inflation and to ensure price stability. So there's no ambiguity in that, and there's no compromise on that. We are very, very concerned that the purchasing power of the average Nigerian should be restored to the levels that they know it to be. And what we are saying is that going forward, we expect that if the environment is such that requires us to tighten, we will tighten. Our projections, however, indicate that things will begin to moderate from about May onwards. And the projection, as you may know, is that by the end of the year, we're expecting the inflationary rates to have come down significantly. So we believe that we're on the right course. And of course, one particular area of cheer as a result of the actions we have taken is the moderation in the foreign exchange rate, which you have seen. Now, don't take the foreign exchange in isolation because it does have major pass-through to inflation. And to the extent that we've seen this happen and we expect it will continue to moderate, we are confident that these tools and measures that the central bank is using will ensure that the inflationary spiral will gradually be brought under stricter control. Of course, from the MPC's standpoint, the MPC does make decisions based on economic data and, of course, market conditions. So as the next MPC, which I've announced will be taken in May, they will obviously look at the existing variables and make a decision accordingly. I hope that will answer the question on tightening. Then, with respect to growth, yes, there appears to be a trade-off of some sort. But the good news is that we expect the tightening to not be long drawn. That really is the good news. We don't expect this to be something that will subsist into too long into the future. And of course, if the right responses are happening in the economy, then I have no doubt that the MPC will take the decision it has to take to properly ensure that the situation into the future is able to take the growth considerations adequately as they should be. With respect to the foreign exchange forwards, now I think it may be important to say a few things with respect to the context. Now, recall that when we came in September, we had a backlog of forward transactions which were contractual in nature and which had already been, as I say, contracted before we came in. Now, it was clear to us that it was very important in the interest of the credibility of the central bank, which at that point in time was very much in question, that we were able to satisfy and take care of these forwards. And if you recall, during the Senate hearings, I had actually made reference to this and said that this would be a priority to ensure that we take care of these forwards within the resource constraints we had and as soon as we could. And that was why on a regular basis, I tried to address the issue, address the press, and be transparent as possible to allow the Nigerians to know exactly where we stood and what we were doing. And you recall that during that period, we settled, a certain tranche, and then we got wind of the fact that, well, there were a number of transactions which had some issues with respect to the genuineness of them. So we said, well, in that case, the best thing may be to let us get a well-reputed organization that can do a proper forensic of the transactions that are so defined as forward contracted transactions. And that was how we came across and brought in Deloitte Management Consultants, who took time, and this really did take months. This is not something that happened overnight, and a lot of this work was going on and people didn't know. But they took months painstakingly to go through all the documents, and to ensure that they had a report which we could rely on. In the course of that, of course, we determined that a number of these transactions did not qualify, and I've said this before. In some cases, you had some requests which, well, you actually had some allocations that were made in millions of dollars, which were never requested for. You also had some where they had no naira, and they were also allocated, huge sums of foreign exchange, and the list goes on. And it was for that reason that we refused to validate those particular transactions. We refused to validate them because, apart from the fact that documentation was not satisfactory, in many cases, they were outright illegal. And the law enforcement agencies, of course, are now looking into those transactions that are, as far as we're concerned, not valid to be paid. I would emphasize that if there's any information to the contrary, we would in due course consider that. But as at today, that is exactly where it stands, and the law enforcement agencies are taking a very, very hard look at those transactions. Other transactions we have settled, and as at today, as I have said before, I will say it again, that the valid transactions, as far as the Central Bank of Nigeria is concerned, have been taken care of. We are also not mindful of the fact that there just may be some stakeholders who, over a period of time, may have had backlogs in one form or the other. We're not unmindful that that could be the case, that some of those may go back, years, a long period of time. We've done what we can to make the market as open and transparent and liquid as possible. So those particular stakeholders are free to access those markets and take care of their backlogs. Okay, but we have met the verified backlogs of contractual obligations as we deem them forward transactions.
Good afternoon, Governor. From Business Day. Thank you so much for taking time to explain the issues around this FX backlog, which is the Basin and Early Money Tax. But quickly, can we get a sense of how much is still ineligible? They have not pledged that these stakeholders are claiming.
Sure.
And can we also understand what makes these claims ineligible?
Sorry, say that again. What?
What makes those claims ineligible?
Yeah, sure. I think the figure is about 2.4, I beg your pardon, 2.4 billion ineligible. 2.4 billion ineligible. Okay, and as I said, there have been several cases, quite frankly, that go from documentation, no Form M available, or as I mentioned earlier, cases where allocations were made and no requests were asked for, or cases where allocations were made and no naira was available. So, you know, the list goes on. So that's a good example of some of the infractions that we noted.
Good afternoon, Governor.
Yeah.
My name is Peter from the Telegraph Newspapers. CBN has lifted forex restriction on dairy products. Did the bank consider the impact of its action on the local market?
Thank you very much. Now, again, this is a situation where, as far as the central bank is concerned, we observed that it is important that our operations are as open and transparent as possible, because it is this lack of transparency that drives people away from the market. Where the market feels that there's something that isn't quite right, or there are distortions, there's a tendency for them to hold back. And one of our objectives, as I have said a number of times, is to ensure that we regulate the market in such a way that it is open and transparent. We observed that in this particular case, only 6 companies are allowed to bring in dairy products and its milk products and its derivatives. Only 6. And we believe that this is oligopolistic, and that in any case, we should not constrain anybody that wants to come to the foreign exchange market to purchase foreign exchange from doing so. We do not believe we should come from doing so. It's not our responsibility, it's not our job to do that. We should leave the market open, transparent, and let those who are in a position to deal in a particular area do so. At least, certainly, we will not ban them from the foreign exchange. We will not ban them from the foreign exchange market. We will not. It is, and certainly, we will not restrict that market to just 6 players. We will not do so.
Good afternoon, Governor and members of the NBC. Nancy Naji. Governor, I want to ask a question following on from the question I asked on Binance last month, because it's been a long 1 month from the time you addressed us here. So my question is really around the status of Binance and now in the country, which is really unclear, as very unfortunately one of its executives escaped custody just a few days ago, while another remains detained with the office of the National Security Advisor amid allegations. You mentioned it here last month, about $26 billion flow from that same organization. So the allegations and accusations of Binance negatively manipulating the naira. And this has really led, at least from what I've seen in the last few days, it has led to a sense of ambiguity, as well as a perceived absence of a unified approach from the federal government regarding the matter. My question to you really is around what is the CBN stance on these ongoing developments, as well as a perceived absence of a unified approach from the federal government regarding the matter. My question to you really is around what is the CBN stance?
Again, a very good question, and thank you for that. And I'll be surprised if it didn't come up, given what has been going on. Well, look, first and foremost, let me clarify to say that the central bank does have, at least we consider ourselves as having the wherewithal to collaborate with other agencies of government. And that is a very important function for us. And where we see we can work with other arms of government, we will do so. And I must say that, and this perhaps should touch on what you just said about a month ago. A month ago, we actually did have collaboration with law enforcement agencies, EFCC, the SEC, and other regulatory bodies as well. And I think what came out of that, quite frankly, has work in progress, but very, very, very positive, as far as I can see. Very positive. Office of the National Security Advisor. So we've been sharing information together. However, in this particular case, the responsibility for regulating cryptocurrency is not our own. It isn't ours. It is strictly that of the Security and Exchange Commission. Okay, that's not our responsibility. And of course, the issue of people, who have been held in, and what we've already in the press. Again, that's strictly speaking the Office of the National Security Advisor. That's not within the purview of the central bank. So, unfortunately, there is nothing to report to you, to tell you, but just to clarify that that is really the relationship that the central bank has on this matter.
We have some questions from some media organizations from Lagos. One is from Uche Usim of the Sun newspapers. Permit me, Mr. Governor, to ask the question on his behalf. He said, recently the CBN from some media organizations from Lagos. One is from Uche Usim of the Sun newspapers. Permit me, Mr. Governor, to ask the question on his behalf. He said, recently the CBN donated 2.15 million sacks of fertilizer to the Federal Ministry of Agriculture and Food Security for distribution to farmers.
And the question is, does this suggest a return to developmental interventions? And the answer is no, it doesn't. And let me explain why it doesn't. Because we have been consistent in saying that we will withdraw from direct interventions. We have been consistent in saying so. We have also been consistent in saying that we will work with those who we believe have the capacity to successfully intervene in whatever manner they can. And that, by the way, includes even capacity building. It's not strictly speaking, direct funding or anything like that. It isn't. It extends to a whole host of different areas. So where we see that capacity is there, the central bank would be happy to partner, and that goes similar to what one had just said about the collaboration that we have had with regulatory authorities and also law enforcement authorities. But let's face this particular issue. Now, the fertilizer that was given out was the residue of an intervention that had been done before we came into office. It was not something that was done directly by us. And the options were either to leave them there to rot away or to give them to those that we believed had the capacity to distribute. And that is exactly what we did with the handing over to the Ministry of Agriculture. In actual fact, the way I see it is that we've taken those particular merchandise and put it where it rightly belongs.
Thank you, sir. I have another question from Laffey of Vanguard. He said the recent appreciation of the Naira against other major global currencies is certainly welcome news. What steps is the CBN taking to ensure that this positive momentum continues?
I have another question from Babajide Komolafe of Vanguard. So that's it. We have the announcement.
So many questions in one. Well, I think first and foremost, it's something that I tend to talk about a lot when I speak on foreign exchange at public fora like this, and that is the issue of distortions. The issue of distortions. And just to say that we were painstaking in ensuring that we removed as many of the distortions that proved in the way of the rates finding their right level for price discovery. Because for price discovery to happen, certain fundamentals or certain attributes need to be in place. And you would recall that there's been a whole myriad of different circulars that have come out over a period of time, which were designed to remove those distortions such that the market became a lot freer and the concept of willing buyer and willing seller became something that was a lot easier to establish. And therefore, by that, you would have the price discovery, the appropriate price discovery. Now, of course, in all this is the importance of liquidity, okay? Because try as you may, if there's not enough liquidity going in and out of the market, then obviously that in itself can pose a problem. The central bank, I would say, looking to the future at some point in time, would expect to have a situation where interventions from the central bank into the market will be minimal to non-existent. But where we see the need to have liquidity pumped in to ensure liquidity in the market and that the market is boisterous and stakeholders can come in and go out, we will do so. The idea is by no means to establish any price, but at least to catalyze the demand and supply equation in such a way that the market gets its own confidence, and as I said, price discovery is established, and people get used to that. And once that becomes a regular occurrence, then we expect that we'll find that the need for central bank to come in and will be significantly reduced to eliminated. The market should really run on its own at some point in time.
Thank you so much, Mr. Governor. Another question just dropped from Numed Ekege of this day newspaper. And he said, Mr. Governor, sir, this is a very short question. We can see the work that you and your team are doing, but how do we avoid rising interest rates from strangulating economic growth?
Yeah, it's a short question, but unfortunately, my response can't be as short as that, to be honest. But really, on a serious note, to say that we are not unmindful of the impact that these increase in interest rates are having. We are not unmindful of it. We are very, very, very mindful. And in actual fact, if you look at it, why are we doing this? Because we've said our main objective is to manage inflation. And we believe that with increased interest rates, we have a situation where foreign exchange market becomes a lot more lively. We've had relative shortages in foreign exchange over the recent past. We're now seeing more activity in the foreign exchange market, which in turn is reducing the exchange rate and is also reducing costs. Okay, so it's not a one-sided affair that the increase in interest rates is strangulating the economy. While it may have those tendencies on one side, with the foreign exchange rate coming down, that also helps to moderate the overall. And as I had said earlier, we would expect that this would not be too long drawn. At least I would hope so, that it would not be too long drawn. We're getting towards a situation where on the exchange rate, it is moderating, and we are expected to continue to moderate. And then it finds a level which, quite frankly, very, very important, is sustainable. That's very, very, very important. A level that is sustainable, which obviously will involve huge collaboration with the fiscal side, because a lot of that cannot just rely on the monetary side alone. So whatever we see on the interest rate side, which is being used to help to moderate prices, buys us time to ensure that the fiscal side, is able to do all the things that it is already doing, and ensures for a more sustainable economy where the need to depend too much on hiking interest rates is considerably reduced. Thank you.
Thank you so much, Mr. Governor, sir. That brings us to the end of this press briefing. Thank you all for coming, and see you.
Wait, one more before you go. Sorry, before you go, because I was almost missed something which I think is very, very important, and that is that one particular individual who is amongst us today and who is referred as the doyen of the directors, Dr. Tumala, is so this is his last NPC meeting.
Retiring next.
Okay, he's retiring. This is his last NPC anyway. So just to thank you on behalf of not just the NPC, but I know I'm speaking for the press as well, for the tireless efforts and of course the high quality you've produced. Thank you very much.
Thank you so much, Mr. Governor. That ends the press briefing. Thank you all for coming, and see you in May.
I had to remind you he's retiring because they say you chopped him up.
That's true. No, that's a good point. You're right. You're right. That would be nice. I deliberately left out that other point about last time. Where did he get us to? Every time.
Still live in Abuja, Nigeria's central bank has raised its monetary policy rate by 200 basis points from 24.75% from 22.75% at its second Monetary Policy Committee meeting today. This is also the bank's 294th MPC meeting under the leadership of Governor Olayemi Cardozo, who took office back in September of last year. Other decisions taken at the MPC include adjusting the asymmetric corridor at 100 plus 100 to negative 300 basis points around MPR, retaining the liquidity ratio at 30%, and retaining the cash reserve ratio at 45%. The committee says it will continue to monitor developments in the economy, and its next meeting will be held on the 20th and 21st of May of this year. Well, Arise business correspondent Rhoda Sodiri is here to help me unpack and dissect exactly what happened during this MPC meeting and the decisions that were taken. Thanks, of course, for joining me this afternoon, Rhoda.
Of course. Hey, how are you? Yeah.
So, unpack, please.
Yeah, let's get it all out the suitcase.
What do we make of this?
There was a big debate online between analysts. Was the CBN going to hold rates? Was it going to hike? There were a lot of arguments in favor of holding, saying, hey, look, you just hiked by 400 basis points in February, just last month. And you hiked the cash reserve ratio to 45%. You adjusted the asymmetric corridor, all those things. Allow for the moves you've made to seep into the economy. But as Governor Cardozo made very clear, inflation is the name of the game. That is what they are chasing. And they are trying to keep the gap between headline inflation and the MPR. They're trying to narrow that gap. So if you think about the last monetary policy rates at 22.75%, inflation headline for February is 31 2.7. So that's if you look at your real rates of return, if you subtract inflation from your MPR, you've got negative 8.95%. That was as of February. Now they've increased it by 200 basis points to 24.75%, and your real rate of return is still negative, but it's minus 6.95%.
The gap is closing.
The gap is closing. So and I made this point earlier this morning on the morning show that while I understand the arguments for holding the rates in place, the next meeting is in May. You're going to get inflation for March. You're going to get, I think, inflation for April before your next meeting. Inflation could continue to gallop upwards. Jeez. So there was a need for them to keep that in. Because if you look at a place like Ghana, for instance, Ghana, there's 3 big rates that we've all been looking at. Ghana was yesterday, Nigeria today, South Africa is tomorrow. Ghana's MPR is at 29%.
Okay.
Ghana's inflation headline is 23.2. So there's a positive real rate of return in Ghana as opposed to a negative. So Ghana has consistently kept MPR, and then of course the dynamics are a little different and so on. So we've got our challenges, but that's the whole point. Because the reason why you're trying to keep that gap narrow is because, as you heard from Cardozo, in terms of foreign exchange inflows coming in, investors want to have more returns for the securities that they buy. So yeah, I mean, as far as keeping the eye on the ball and trying to chase inflation. I said that he probably would hike this morning. I mean, but it would have gone either way. I mean, a part of me was trying to talk out the other side of my mouth, saying that it would also hold. But I was like, hey, hold a gun to my head. He's going to hike, and that's what they did.
Okay, let's speak about the FX backlogs that he was discussing. They made him a priority to be cleared when he came in back in September. He said that there had to be quite a few forensic audits in order to scheme out the illegal and unqualified transactions, and law enforcement agencies are actually looking into that now. Your thoughts on that?
So there was a lot of emphasis made on valid versus invalid claims, right? You can think back to how these things can be abused. Think about, subsidies, and people, had empty vessels of, ships coming in here in past administrations claiming that they were bringing in fuel they weren't and getting paid and stuff like that. So for this issue, they wanted to make sure that, I think it was Deloitte that they brought in to audit this.
Yes, he said it was Deloitte that
audited
it.
To make sure that whoever says that they have, FX claims, and by the way, these are for forwards. So forwards are derivatives, where you make a FX forward. You make an agreement. I will, give you your, I'll take foreign exchange from you now. It's contractual. Thank you, and I'll pay it back to you at a later date. Those contractual agreements are what the central bank is focusing on. So for anyone else, and I think he mentioned 2.2 billion being invalid or something, because a reporter asked him to put a number to it. It was important that, so it's a signal to the market, Hawa. It's saying that, listen, we're serious about clearing this backlog. If you are to get into an agreement with the central bank, we will pay you back. It's all about signaling. So it was very important for him to emphasize that. So the market knows that, hey, listen, Nigeria is open for business. We can put our money in there, and whatever happens, we'll be able to get back. Now, for anyone who says that, oh no, my claim hasn't been addressed, they're saying, come forward, bring it forward, show your paperwork, and then it'll be addressed. That's
that's the key word, signaling, one of my favorites.
Oh yeah.
Let's speak about the liquidity ratio.
Yes. So the issue here, we had the chief risk officer of Fidelity Bank PLC earlier on the Global Business Report. That was held in place. Liquidity maintained at 30%. Your cash reserve ratio maintained at 45% for commercial banks, for merchant banks at 14%. So basically what that means is that every 45 naira out of every 100 naira that comes into a bank is going to be sterilized and kept with the central bank. That's your 45% cash reserve ratio. And essentially what that means, that doesn't earn interest. Now, the banks don't like it because they're saying, hey, listen, you're taking money from me and holding on to it. I can't give it out as a loan. I can't, I can't earn any interest on it if I want to put it into, securities and so on and so forth. But what the CBN is saying is, hey, look, we are going to telegraph to you when we make these debits, these CIR debits from your vaults. We're going to let you know. It's going to be done in an orderly fashion. We're not going to create any panic. And also they want to drain liquidity from the system, because what happens is when you've got too much liquidity, you essentially, if I give you a bunch of money right now, you either, go and buy foreign exchange, or if there's too many of us in this studio chasing only just one item that's being sold, you're going to pull up, it's demand pull.
So there's that issue. Just give me the money first. Let's see what I do with it. First things first.
I shouldn't telegraph, right? And so essentially, that's why the cash reserve ratio is where it is. But those other parameters were left in place. I think for them, it was just to keep the headline figure going up there.
All right. And then there was a journalist who brought up the question about the fertilizer issue. Do you think he addressed that question enough?
I thought he addressed I don't know why this is a controversial thing. It's very straight. The man was speaking English. This was back when he addressed this when he talked to the Senate.
Yeah,
right?
When he was on the floor.
Right, on the floor. And that was, he went to the House of Reps. The whole economic team went to talk to the House of Reps and talk to the Senate. He said very clearly, we are not against interventions. We're just against interventions that are, wasteful and don't really get anything. And further to the point, we will only engage in interventions where, if it's out of our purview, we're going to hand it over to the entities who have the expertise to do it. He said that way back at the Senate, but he's had to repeat himself. So with the fertilizers, as he just said again for like the umpteenth time, it was what was left over from the prior administration, the Anchor Borrowers Program. So he said, what did you want us? You want us to burn it or bury it? Or, we have a food crisis. You need fertilizer to grow food. So why don't we give it to the Ministry of Finance, give it to the Ministry of Agriculture,
to handle it,
and you give it away and there. So I thought he's addressed it, but it keeps coming up over and over again. I guess people are just having a little bit of trouble discerning what he meant by interventions and thinking that he's saying the CBN is hands off. No, they're still doing them, but they have to be targeted and they have to make sure they don't lead to inflation, which is what they're fighting with the headline, with the monetary policy rates.
Well, believe me, it's probably going to come up again in the
hey.
This isn't the last time.
Right.
Repetition is key sometimes.
For learning.
Repetition is key. But okay, all this finance jargon aside, right? What does this mean for the average Nigerian? Okay. What does this mean for our food prices, for the amount of money that we're going to be able to keep in our pockets?
Right. So it's tightening, right? And when they use that, when they say it's monetary tightening, that means that they are essentially making things more expensive in order to temper down demand, have people, buy less stuff and maybe apply for less loans. Because what's going to happen now is that your bank, if you have a loan, they will either send you a text message or write you a letter or an email saying, hey, Mr. or Mrs. Arise News viewer, due to economic conditions, your loan has been repriced upwards, right?
Don't you just love those emails?
Right. So the thing is, the whole idea with the tightening is that, yes, things are going to get more expensive, loans and so on and so forth. But as he said, it's two sides to the coin, right? In that the amount of FX inflows that are coming in as a result of making securities in Nigeria more attractive means that foreign investors are bringing more FX in. Over the last cycle, we've had about 1.3 billion coming in. That you've seen the exchange rates kind of come down. From the high of almost $1,800 naira to the dollar, you're about 1,004 now. So in fact, it even got to 1,392. Right?
I saw that. I was excited.
Right. So in that and the pass-through effect. When you look at inflation and everything else, we are so import dependent. The pass-through effect from foreign exchange is heavy, right? Aside from everything else. So while you can say, yes, you're making things more expensive, you're also, or the flip side is that that's making your securities more attractive because you're raising rates, and then that brings more FX, which brings down the exchange and effectively would make things a little less expensive for the average Nigerian. And then again, the average Nigerian, I'm looking forward to seeing the next set of treasury bill auctions, retail savings bond auctions, and so on and so forth. On the money market and fixed income side, rates are going to go up, and you now can invest your naira and get back a higher return. So there's also that to look at as well.
Well, the governor did say things were going to be getting better, and by the end of the year, things would be
hopefully.
There's no crystal ball to look into.
No crystal ball, but please, this is another important point here. There's the monetary side and there's the fiscal side, right? So he's doing his job. They're doing things on the monetary, which is price stability, interest
Fiscal has to step up their game.
Right. You got to do something about the insecurity. You've got to do something about electricity, power, roads that get foods from the farms to our tables. So the fiscal side still has their job to do as well.
Great to have you here. Thank you so much for unpacking and explaining that to everyone out there. Always good to have you on here,
If I leave, you can call me right back. I'm here.
No, thanks, Rodas.